Hey everybody, I've got another housing market update for you guys. If you flip houses, invest in real estate, or you're just trying to keep your finger on the pulse of where the opportunities are, this is exactly where you need to be. Welcome to the Property Files. Today, I'm going to break down what's really happening right now because we're seeing a big shift in the housing market. In fact, 75 major housing markets have officially tipped into buyer's market territory, and that spells real opportunity for smart investors and flippers who know how to navigate what's coming next. So grab a pen, listen up, and make sure you stick around until the end. And if you're not already on my free newsletter, you're going to want to jump on that today. There's a link down in the description below. That's where I share bonus market insights and personal deal strategies so you don't get left behind in this changing market. So link again is down in the description below. It's free and it'll keep you one step ahead of everybody else. So get on that list. All right, let's dive in. So what does a buyer's market mean for you if you're flipping? Well, first, we're seeing more homes sit longer in the market and more sellers cutting prices or offering concessions just to get deals done. According to the latest data, in 78 out of the 200 largest metros in the US, active inventory is now back above pre-pandemic levels. For perspective, during the pandemic housing boom, buyers barely had any negotiation power. Now, affordability issues and high mortgage rates are finally putting some leverage back in your hands. So you guys remember the day in 2019 to 2020 during the pandemic, the housing market increased massively and everybody was selling the homes for hundreds of thousands of dollars more than they paid for them in 2017, 2018, 2019. So if you're sourcing flips or you're holding out for a better buy, your moment might be right now. Let's talk numbers for a second. As of this week, the 30-year fixed mortgage rate is hovering around 6.8%, with 15-year loans holding just under 6%. And refinance rates are still sitting in that mid 6 to 7% range. Now, I know high rates can scare some people off, but here's the thing for flippers. High rates push real buyers to the sidelines. That means less competition when you're buying, more motivated sellers, and more room to negotiate better deals up front. It also means your exit strategy matters more than ever. So keep a close eye on local supply and demand and be conservative with your ARVs. Now, where are these buyers markets popping up the fastest? A lot of them are in the Sun Belt and South. Think places like Florida, parts of Texas, Memphis, Tennessee, even some pockets in North Carolina. Believe it or not, Nashville is shifting faster than many expected, given how hot it was for years. Vegas is another one to watch. We're seeing retirees leaving the city, investors cashing out, and new listings flooding the market. Las Vegas inventory jumped over 77% year over year. That's huge. And when you have that much supply coming online, motivated sellers are going to deal, especially if you're bringing cash or quick closes. So it's not just the slot machines in Las Vegas that are doing the cha-ching. It's also the housing market opportunities. So here's the takeaway if you're flipping. Number one, run your numbers tighter than ever. In a shifting market, the worst thing you can do is speculate on resale prices. Use recent comps. You hear me? Use recent comps, not wishful thinking. Number two, get your offers out there. Sellers who miss the peak are often ready to negotiate. Don't be afraid to lowball where it makes sense, as long as you can justify it with the data. And number three, focus on cash flow options too. If you pick up a deal, but the resale window doesn't make sense right away, can you pivot? Short-term rental, mid-term, or even rent and hold for 12 months if it helps you ride out rate swings and protect your margin. One more quick stat before we wrap up. Nationwide, active housing inventory is still about 11% lower than 2019 levels, but it's creeping up month after month. Back in January, only 41 of the largest markets were above pre-pandemic inventory. Now we're at 78, and the trend line is clear. More supply, slower sales, more price cuts, and that's where flippers can win if they play it smart. Look, I'll say this. This is not 2008. I don't believe we're heading for a massive crash, but we are seeing a correction. For flippers, corrections are where fortunes get made. If you know how to buy right, manage your timelines, and watch your numbers like a hawk. If you want to keep getting these updates, make sure you subscribe and then also jump on my free real estate investor newsletter. Each week, I break down the newest housing market trends, best regions to target, mistakes to avoid, and my personal take on where the money is moving next. It's quick, actionable, and you can read it in under 5 minutes. Plus, I always include extra data I don't share anywhere else. Just click the link below, pop in your email, and I'll send you my next one this week. All right, that's your housing market snapshot for today. If you got value from this, hit that like button so more investors can see it. Drop a comment with your biggest takeaway. And if you're seeing deals sit longer in your market, I want to hear about it. Remember, smart flippers always thrive in buyers markets. Keep your eyes open, your numbers tied, and your strategy ready to pivot. Stay tuned, and I'll see you on the next update.